Global Monetary Watch welcomes you, and today is August 4th. Before we dive into today's discussion, take a moment to approach every headline with a critical mindset, because in the world of international currencies, the loudest claims are not always supported by the strongest evidence. Over the last several weeks, conversations surrounding both the Iraqi Dinar and the Vietnamese Dong have accelerated across online communities, bringing renewed excitement and equally renewed confusion. Today's report looks beyond speculation and focuses on the documented developments shaping these discussions. By examining official economic actions, central bank policies, and broader financial reforms, we can better understand what is actually happening and why these developments continue to attract attention from observers around the world. One of the biggest topics circulating recently is the renewed attention surrounding Vietnam and its national currency. Many online discussions have once again suggested that Vietnam could be approaching a dramatic currency event, often comparing the Vietnamese Dong with the Iraqi Dinar. Looking at verified information instead of online speculation provides a much clearer understanding of where Vietnam currently stands within the global economy. A major development occurred on July 1st, 2026, when the World Bank officially recognized Vietnam as an upper-middle-income economy. This classification followed years of sustained economic expansion, industrial growth, rising exports, and increasing national income. According to the published data, Vietnam's gross national income per person reached approximately $4,970, meeting the threshold for its new economic category. This recognition reflects long-term improvements across multiple sectors of the country's economy rather than a sudden change. It represents years of policy implementation, infrastructure investment, manufacturing expansion, and international trade relationships that gradually strengthened Vietnam's economic position on the global stage. Although this economic milestone is important, it should not automatically be interpreted as evidence of an upcoming currency revaluation. The World Bank's classification measures economic progress and income levels, but it does not determine exchange rate policy. Decisions regarding the Vietnamese Dong remain under the authority of Vietnam's central bank, which has consistently emphasized stability in its monetary framework. Maintaining a relatively stable currency has supported Vietnam's export-oriented economy by helping domestic manufacturers remain competitive in international markets. Because exports represent a significant portion of Vietnam's economic success, policymakers have historically preferred gradual monetary management instead of abrupt exchange rate adjustments that could disrupt trade competitiveness. This distinction is essential because economic development and currency policy, while connected over long periods, do not necessarily move together in the short term. A country's improving income levels, expanding industries, and stronger international standing can certainly strengthen confidence in its economy, yet those factors alone do not require an immediate adjustment in the value of its currency. Central banks evaluate many additional considerations, including inflation, trade balances, financial stability, foreign investment flows, and broader macroeconomic objectives before making any significant monetary decisions. Understanding these separate responsibilities helps explain why major economic announcements should not automatically be viewed as signals of imminent exchange rate changes. The renewed attention surrounding Vietnam has also highlighted how quickly speculation can spread when major economic news is released. In many online discussions, claims about dramatic changes in the Vietnamese Dong have been presented alongside Iraq's monetary reforms as though both countries are following identical paths. However, the available evidence suggests that the two situations are fundamentally different. Vietnam's recent recognition reflects years of economic expansion under an established monetary framework, while Iraq's financial story is centered on banking modernization, institutional reforms, and efforts to strengthen its financial system. Understanding this distinction is essential for anyone trying to follow developments objectively rather than relying on simplified comparisons. Turning to Iraq, the focus shifts away from speculation and toward documented institutional activity. Throughout recent months, the Central Bank of Iraq has continued implementing a series of banking reforms designed to strengthen the country's financial infrastructure. These efforts extend beyond routine administrative changes and involve improving regulatory oversight, modernizing banking operations, and increasing compliance with internationally recognized financial standards. Such reforms are intended to improve transparency and efficiency within Iraq's banking sector while supporting broader economic modernization. Although these initiatives require time to produce measurable results, they demonstrate an ongoing commitment to strengthening the country's financial institutions through structured policy implementation. One of the most closely watched aspects of these reforms involves Iraq's cooperation with international financial partners, including continued engagement with the United States Treasury. Reports during July 2026 described ongoing coordination between officials from both countries regarding financial oversight, banking operations, and measures designed to improve monetary stability. This cooperation reflects an operational working relationship focused on strengthening Iraq's financial system rather than short-term market movements. International collaboration of this nature generally involves technical expertise, regulatory improvements, and enhanced financial monitoring, all of which contribute to building greater confidence in the country's banking environment over time. Another important element of Iraq's reform agenda involves compliance with internationally recognized standards related to anti-money laundering and combating the financing of terrorism, commonly referred to as AML and CFT. These frameworks are widely used throughout the global financial system and help countries strengthen the integrity of their banking sectors. By improving compliance with these standards, Iraq aims to enhance transparency, reduce financial risk, and align its institutions with internationally accepted regulatory practices. These efforts are considered important by many international organizations because stronger compliance can improve trust between financial institutions and facilitate greater participation in global banking networks. Alongside regulatory improvements, Iraq has also continued restructuring various departments within the central bank itself. Internal organizational reforms may appear less visible than public announcements, yet they often play a significant role in improving institutional effectiveness. Updating administrative procedures, strengthening oversight mechanisms, and refining operational responsibilities can help create a more efficient financial system capable of supporting broader economic objectives. While these changes may not generate immediate public attention, they represent part of a long-term modernization strategy focused on enhancing governance, improving accountability, and preparing the banking sector to operate more effectively within an increasingly interconnected international financial environment. The broader economic picture also deserves careful attention because Iraq's financial reforms are unfolding alongside changing conditions in the global energy market. As one of the world's major oil-producing nations, Iraq depends heavily on petroleum exports to generate government revenue. When international oil prices fluctuate, the effects extend beyond energy markets and directly influence public spending, infrastructure projects, and broader fiscal planning. During periods of weaker oil prices, budgetary pressures can increase, making it more difficult for policymakers to balance immediate financial needs with long-term reform initiatives. This relationship between energy revenues and government finances remains one of the most important factors influencing Iraq's overall economic trajectory. History provides several examples of how external economic conditions can influence Iraq's reform timeline. Previous budget cycles experienced delays due to political negotiations, changing market conditions, and fiscal uncertainty, demonstrating that large-scale economic reforms rarely follow a perfectly predictable schedule. Progress often occurs in phases rather than through a single transformative event. As circumstances change, policymakers frequently adjust priorities to address immediate financial challenges while continuing to pursue broader modernization goals. Recognizing this pattern helps place current developments into context and highlights why observers should evaluate reforms as part of a long-term process instead of expecting rapid or uninterrupted progress. Another important development receiving increased attention is Iraq's continued engagement with the World Trade Organization accession process. Joining the WTO involves much more than expanding international trade opportunities. It requires countries to strengthen legal frameworks, improve regulatory transparency, enhance market accessibility, and demonstrate compliance with internationally recognized commercial standards. These requirements encourage institutional improvements that extend well beyond trade itself. Although WTO membership is typically achieved over several years rather than through a single decision, continued participation in the accession process signals Iraq's intention to deepen its integration into the global economic system and strengthen its standing within international commerce. For many economic analysts, the significance of WTO-related reforms lies in the direction they represent rather than the speed at which they are completed. Countries pursuing greater participation in international trade often undertake comprehensive improvements across multiple sectors, including customs procedures, financial regulation, legal protections, and commercial governance. Each completed reform contributes incrementally to building a more transparent and predictable economic environment. While these changes do not directly determine exchange rate policy, they can strengthen institutional credibility and improve confidence among international businesses and financial organizations that engage with the country's economy. Returning briefly to Vietnam provides an opportunity to understand one of the more meaningful comparisons between the two countries. Rather than focusing on speculation surrounding currency values, the stronger comparison involves the role of sustained economic reform. Vietnam's rise to upper-middle income status resulted from years of policy consistency, investment, manufacturing growth, expanding exports, and institutional development. Iraq's current reform efforts reflect a different stage of economic development and operate within a distinct political and financial environment, yet both examples illustrate how long-term structural improvements can gradually strengthen a nation's economic credibility. The lesson is not that identical outcomes should be expected, but that institutional reform remains a significant component of broader economic progress. Point one concept that has increasingly appeared in discussions surrounding Iraq's economy is the real effective exchange rate, often abbreviated as RER. Unlike a simple bilateral exchange rate, the RER measures a country's currency against a basket of currencies belonging to its major trading partners while also accounting for differences in inflation. Economists use this indicator to evaluate whether a currency appears relatively stronger or weaker compared with the country's underlying trade relationships and economic conditions. Because it incorporates multiple variables rather than focusing on a single exchange rate, the RER is widely regarded as one of several useful analytical tools for understanding long-term currency competitiveness. When analysts discuss whether a currency may be undervalued or overvalued, they frequently reference measures such as the RER alongside broader economic indicators. In Iraq's case, discussions often include factors like oil production, government revenues, reconstruction efforts, trade activity, inflation trends, and institutional reforms. These elements contribute to evaluating the country's overall economic fundamentals, but they do not independently determine future monetary policy. Central banks consider a broad range of domestic and international conditions before making any policy adjustments. As a result, analytical frameworks are valuable for understanding economic relationships, yet they should not be confused with predictions about future exchange rate decisions. Taking all of these developments together provides a more balanced understanding of the current landscape. Vietnam's recent economic recognition reflects measurable progress supported by years of sustained growth, while Iraq continues pursuing financial modernization through banking reforms, regulatory improvements, and increased engagement with international institutions. Although these developments involve different economic circumstances, both demonstrate the importance of long-term structural change rather than short-term headlines. Careful observation of documented policy actions offers a stronger foundation for understanding these economies than relying on speculation or isolated claims circulating across social media and online discussion forums. Another important takeaway is the value of distinguishing verified information from assumptions. Official announcements by institutions such as central banks, international financial organizations, and government agencies provide a factual basis for evaluating developments. By contrast, many online narratives combine unrelated events into conclusions that extend beyond available evidence. Maintaining an evidence-based approach encourages more accurate interpretation of economic news while reducing the influence of rumors that often accompany high-profile topics like international currencies. Careful analysis requires patience, attention to documentation, and a willingness to separate confirmed developments from unsupported speculation. Ultimately, both Iraq and Vietnam remain countries undergoing important economic transitions, each following its own unique path shaped by domestic priorities, international relationships, and evolving financial conditions. Vietnam's continued economic advancement demonstrates the impact of sustained policy implementation over many years, while Iraq's banking reforms, regulatory modernization, cooperation with international financial partners, and broader institutional changes illustrate an ongoing effort to strengthen its financial system. These developments are significant because they reflect measurable progress within each country's economic framework, even though their objectives and timelines differ substantially. That concludes today's analysis from Global Monetary Watch for August 4th. Our goal is to focus on verified information, documented economic developments, and balanced analysis rather than speculation or exaggerated claims. As new reports emerge from official institutions and financial authorities, they will provide additional context for understanding how these evolving reforms continue to shape Iraq's and Vietnam's economic outlook. Thank you for spending your time with us today. Stay informed, continue following credible sources, and we'll be back with another comprehensive update as new developments unfold. Until next time, thank you for watching Global Monetary Watch.